Yep, you read the title right, my friend. You can still double your net worth. It is not too late to get in the train and to benefit from this great transfer of wealth that already started. And it's hard to say, but a lot of people might miss on this great transfer of wealth. So I'm going to share with you in this video few things you need to pay attention to that will be totally different from what used to work last year and the year before because of how the economy is looking and how the market is actually setting itself for the next 6 months, 6, 12 months, 18, 24 months. So if you look at the so far how the market have been performing, you look at the S&P 500, which is just a mix of all the top 500 companies operating in the US economy. All right. So now is really a right time. Now is really a very, 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 very good time to start positioning yourself in order to benefit from what I call a great transfer of wealth, because right now everything is pretty much on sale. I mean, even with the market gaining today, everything is still very much so on sale. And there is a difference. And I really don't understand why people tend to make this difference. But whenever your favorite car, your dream car, or your dream house, or even your dream watch, or anything that you consider to be your dream thing was to be on sale 15%, 20%, 25%, 30%, 50%, 70, 80, 90%, people tend to jump on those type of deals. Yeah, they jump because it's like buying something worth $1,000 at $100, literally. So when it comes to stocks, when it comes to investments, when it comes to the mutual, I mean the stock market, people tend to be a lot more afraid. But in reality, it is no different. Why? Because it's not because the stock of a company is down 90% that it means that the company is 90% less valuable than it was a month ago. No, the company is still in business. The company is still making money. The company is still working towards growth and being, adding value to the stock, I mean, to the marketplace. And that is the essence of capitalism. So it's not because stocks have been down significantly that it means it's going to remain there. Because as a matter of fact, let me show you something. Let me show you something really, really interesting. If you look on the day we're green, all right, meaning the stock market, I mean the S&P 500 gain, especially as we moved away from the 4,000 level, which is really, really a big psychological level. Now if you look at the last month, down 7%. You look at the last 6 months, still down 13%. But if you go all the way since the beginning of this year to date, the market is still down 15%, at least by looking at the S&P 500. Now, if you jump to the NASDAQ, which is the basket regrouping all of the technology companies, all of the growth technologies companies, I mean the growth tech companies, your Tesla, your NIO, your EVs, your Netflix, Zoom, AMD, Microsoft, Google, Apple, they are all in here. But if you look, last month, down 10%. Last 6 months, down 25%, man. And still the beginning of this year, 24%, so around 25%. So we're talking about a 25% discount. Now, let me ask you this. Do you really think Apple, Google, Amazon, or Tesla are going to go out of business anytime soon in the next 6 months to 60 years? I don't think so. At least with information and where we currently sit now. That being said, if you zoom to the 5 years, you can see that, man, even when the market tend to drop, it always recover. Why? Because there is always this discrepancy. There is always this gap between people gambling, people being panicking, people being euphoric, people chasing greed, people chasing money. And sometimes stocks will be overvalued. Sometimes it will be way undervalued, like right now. But ultimately, the companies always move forward. They find new products, they find new services, they find new markets. They find there is the digital revolution, and all of that fuels the market to always go up, to always recover. So if you bought, for example, here, even with the dip that we are now, you will still be almost doubling your investment. All right, you will still be almost doubling your investment, sitting at 90% with stocks within, the Nasdaq Composite Index. So the bottom line is, it doesn't matter where the stocks are sitting right now. Some of the companies are down 90, 80, 75% still. But those companies are not going to be out of business. Some of the companies, the big names, are down 25%. So I guess the message here is, if you take advantage of these huge sales right now, you're positioning yourself so that your future self and your future generation, your kids, your wife, your grandkids, and maybe the grandkids will thank you. Will thank you for what you did today. And this doesn't have to be a big amount. You don't have to know exactly anything or everything about how the stock market works. Now, there's going to be a shift between how stocks used to be bought in the last 2 years than now. And we have to look at two major things. The first thing is the inflation. For the last 20 years, the market has been operating under interest rates that are very close to zero. That's going to change. And second, for the last 2 years, we had a lot of money, stimulus checks. We had a lot of money coming from the government, and that is running out. That is significantly running out. So you're going to have less buy the dips from anybody, any average Joe on the market. Now, what used to work then will not necessarily work now. And that's why you need to be really, really selective with the type of stocks you choose, because you need to have, as I'm doing, short-term investments, medium investments, and long-term investments. Short-term, brokerage account, all right? Medium-term, Roth IRA, Roth 401k, and then IRA. Long-term, you can also do those. But you can do all of these three in the same type of account. Maybe a Roth IRA, maybe a Roth 401k. But usually, I try to separate so that I know exactly where the money is going in terms of tax perspective and anything else. So if you don't know how to pick the right stock, this is going to be critical. This is going to be critical because now fundamental are going to go back into the piece. And by fundamental, I mean stocks are not going to always go up 100% in just a matter of a few weeks like we saw in the last 2 years. So you have to be really aware of that. Second, how to pick your ETFs, because ETFs is also something you need to have in your investment mix, especially if you're starting with the stock market. And then how to choose your mutual funds. How do you manage with all the taxes that are coming with the gains you're making in the market? When is the right time to buy? When is the right time to sell and to shift the money into something else, because the market is evolving in cycles. All of those things. How to invest in this market where we're talking about recession. How to invest in this current market where we're talking about high inflation that are maybe going to stick with us for the next 2 years. So all of these are things we didn't have in the last 2 years and that are going to shift the way the market evolves. So if you want to really position yourself now and you are kind of afraid about, how to do it, well, the good news is I have services, two types of services. The first one is I can help you. I can advise you. I can, be your consultant and help you set yourself straight so that we design a strategy that will work for your personal, unique needs. Help you start your own, investment strategies. And then you have another a service we can find in the description of the video below where if you already have a portfolio, but you don't know, how to shift, you don't know how to set up your short, medium, long-term investments, then I can also look into that with you. We can sit down for an hour and go through exactly what you need to tweak, what you need to change, what you need to stick with. So that is the message, folks. Right now is really the best time to invest in the stock market. But as I mentioned, we have to be careful because what used to work 2 years ago will not work now. So take advantage of it.